Of course, when we look at the yuan, we always have to contrast what's going on in Asia with what's going on with the dollar overall. And I think right now, both of those factors are pointing towards a little bit of downside for the dollar renminbi. So it is the sense that the Asian region is recovering, that maybe China's asset markets are catching up with the positive sentiment around it, but also that we're seeing some downside pressure on the US dollar more broadly. That should give you some downside. So we think we will stay below 7, and there's certainly some downside room for where we are right now.
Okay, so if you're talking about this relationship to the dollar, let's get a bit deeper into your greenback forecast here, because listening to St. Louis Fed President James Bullard there, on the one hand, he's highlighting areas of improvement with the jobs area, let's say, but also talking about some real risks, even saying we could still get a financial crisis. We could still get all these troubles along the way. How does one trade the dollar in this environment where the Fed stands ready to provide more support, but the outlook isn't entirely clear when it comes to growth?
Yes, that's very aptly put. So we do think there's a number of really big cross currents. And overall, we think that the supportive factors for risk markets, which are in the end, we think dollar negative, they're probably dominating in the near term. So that's what we call the trifecta between the massive liquidity injections by the Fed and other central banks, pretty defensive investor positioning globally, but also, this is where we agree with Jim Bullard, the expectation that the cyclical positive momentum will probably persist. So we think there is downside for the US dollar against the majors. We think that applies to the euro. So we see euro dollar upside. We see some dollar yen downside as well. But that's still in a context where actually the U.S. economy overall stands up relatively well against the others. So it's not really riding off U.S. exceptionalism in growth. It is a somewhat more benign investment environment globally that is just forcing investors to look for perhaps some cheaper alternatives and some opportunities outside of the U.S., given how much exposure there is globally to U.S. assets.